Hi, and welcome to the panel, Real Estate Investment in a Changing World. I'm excited to be joined by a really awesome panel. But before we get started, I wanted to just quickly introduce myself so you know where I'm coming from. I'm Anna Claire Harper. I'm CEO of SPI Capital, which is an algorithm-driven property asset manager that aims to transform how investors access stable, hands-off returns from residential property. The business is relatively new, and we've recently secured seed capital to target a £250 million private rental sector investment across 3,000 flats and houses over the next 3 years. I also published a book called Strategic Property Investing, which became a bestseller during lockdown. And that shared what I've learned through my career, working with private equity firms through to high net worth individuals. Most of my career has been focused on enabling high net worths to more easily diversify into the private rental sector, typically smaller deals worth less than 5 million at the more affordable end of the market. Most recently, I developed the strategy and built the seed portfolio for a high net worth backed fund targeting £100 million housing portfolio. And before this, I worked on about 2 billion of transactions as a strategy consultant at Deloitte and studied real estate at Cambridge. One of the opportunities I had last year was to deliver a TEDx talk on socially responsible residential property investment, which gave me the chance to really get to the heart of some of the issues that we're going to discuss today. And they're really at the forefront of where the real estate sector is going. So just very briefly on the theme of sustainable investing, where the market is going. At my business, SPI Capital, our view is that the strategy has to be profitable, economically resilient, and socially responsible. And we really think that all three can work together. We'd go so far as to say that going forward, it will be very hard to run a real estate business without all three, because the investors of the future value resilience and social responsibility more than ever before. Strategically, we see an opportunity and a gap in the residential market to invest in a way that is economically resilient, but also fares well in relation to ESG metrics, which is to focus on built assets that need improvements and better management rather than starting from scratch. To be profitable, it needs to generate yields and growth. The assets, typically in the Northern Powerhouse and Oxford-Cambridge arc, typically generate 5 to 10% per annum. To be economically resilient, it has to focus on fundamentals, so a strong growing demand and constrained supply. To deliver well in terms of ESG metrics, it needs to be beneficial from a social and environmental perspective. So in our case, it's about providing affordable quality housing through making use of existing assets, making use of the embedded carbon cost of built assets rather than the big carbon footprint of starting from scratch. So I'd love to hear a brief introduction from each of the panelists. Can you give a 1-minute summary of who you are, what you do, and how sustainable real estate investing is relevant and important to you, starting with Abby?
Hi everyone, I'm Abigail Dean and I'm Head of Sustainability for Nuveen Real Estate. Nuveen Real Estate is one of the largest real estate asset managers in the world. We currently have just over $130 billion worth of assets over management spread across the US, Europe and Asia Pacific, and we invest across all different real estate sectors. My role as Head of Sustainability is to ensure that responsible investing practices are embedded across the investment lifecycle. So that means that me and my team work closely with all of our colleagues and looking at integrating sustainability into the investment process from start to finish. I've been at Nuveen for 4 years, and it's a real privilege to work somewhere where responsible investing is really part of our DNA and is seen as a key differentiator and part of who we are. It's somewhere where sustainability is really at the forefront of what we do, and we're proud to have leadership in that area. Before working at Nuveen, I worked for 10 years at JLL, where I worked in sustainability consulting and in the property management business, integrating sustainability into that function.
Brilliant, thank you. How about Jessica?
Hi, good to be on the panel. So Jessica Hartman, I head up the UK office for DWS, also another global asset manager. And I'm pretty much leading the portfolio management side for our pan-European business, who have around 30 billion euros of assets under management across all sectors in multiple different countries across Europe, and then working with our wider partners in the US and in Asia. From a sustainability perspective, DWS was one of the first signatories from an asset management group to PRI, the Principles of Responsible Investing. That was back in 2008, and therefore it's been a long road for our real estate business to develop further ESG strategies amongst all our different products, risks types, and sector approaches, and very much embedded in our strategic outlooks, in our investment processes, all the way down to how our asset managers think on a day-to-day basis. So it's great to be on a panel that is going to unpick some of the opportunities and the challenges today. Thank you.
Fantastic, thank you. And Thomas?
I'm real estate partner of Middlecap Group, which is a real estate investor and developer. We are focusing mainly on prime real estate developments in key cities in Europe, London, Berlin, Budapest, Prague. And our responsible investment practice is based mainly on defining the concept of the building, because we are not only investor, we are also developer. So we are defining the future concept of the building, and we are doing it through focus on green design, which is the sustainable element, but also important part is future proofing of the building, which comes with the technology, with the smart elements to the building, and also well standards of the buildings.
Brilliant, thank you. So the firms that you're working for and the parts of the industry that you're focused on, all three of you, I would say leading the way in terms of real estate, certainly ahead of the residential sector and the SME sector that I'm in. So I'm really looking forward to learning from you all, to be honest. And I've got some questions for you around three key themes. Firstly, understanding and measuring. Secondly, risks and threats. And then strengths and opportunities around socially responsible investing, which I'll use interchangeably with sustainable investing, just to clarify that. So on understanding socially responsible or sustainable investing, Abby, one of the big issues that I kept coming up against when I was researching the TEDx talk that I mentioned earlier, was there's a massive lack of consistent measurement of ESG metrics in the residential space. There's no accepted yardsticks that can be easily used, which can lead to greenwashing, where in the extreme case, we hear about companies that market that they're planting trees and they're also at the same time destroying rainforests. There's a bit of an incentive as well to greenwash, because that opens up this huge $30 trillion potential ESG investment globally. But on the theme of understanding what good looks like, how do you measure your effectiveness in socially responsible or sustainable investing?
I think it's a really good question, and I agree that measuring is absolutely critical to transparency, and to be able to show effectively to investors and other stakeholders how we're actually doing. And it's really important that we do have these standardized metrics so that we can get away from any potential greenwashing. I think something that has really helped over the last decade is GRESB, the Global Real Estate Sustainability Benchmark, which has introduced a common framework by which different real estate funds and REITs can be compared against each other in terms of their sustainability performance. And that has really helped to bring a lot of standardization into the area, and mean that investors can compare different real estate funds much more effectively against each other than they used to be able to. But having said that, I think there is still a real lack of data in some areas, and this is particularly the case when it comes to the environmental performance of buildings, where we're still looking at imperfect metrics when we really try to understand how sustainable a building is, and how close to achieving a sort of net zero carbon standard it is. Now, the World Green Building Council has said that all buildings need to be net zero carbon by 2050 if the real estate sector is to do its part in delivering the Paris Accord commitment to keep global warming to no more than 2 degrees. But there's a real challenge in the industry that we haven't really quite got there in terms of defining what a net zero carbon building really is. And for most buildings, we don't even have a full set of data of how much energy they're consuming. And that's because in a lot of buildings, you'll have this division between landlord and tenant, where landlord's procuring the energy for some parts of the building and the tenant for the others. And it's difficult to get access to both elements of that data. So that's just one example of the challenges that we're facing. I think there are even less well-established metrics in terms of the more social side of investing, where it's not nearly so clear what you can actually measure and monitor. But I do think that the industry's made a bit of a shift and is consciously trying to be more transparent and to be more standardized in terms of its data. And I also think that investors have become a lot better at interrogating that information and being clear about what kind of metrics they want to see reporting on. So definitely we're making a move in the right direction.
Yeah, brilliant. That was really interesting. And Jessica, do you have anything to add to that on, I suppose, how you measure the effectiveness in sustainable investing?
Yeah, I agree a lot with what Abby says. Our group is in a not a dissimilar position. I think it's very important that we're transparent with investors as to our approach. So investors in our products, we really show them where we consider ESG metrics through every piece of the investment process, whether that's at the acquisition stage, where we're taking an audit of, say, an office building to understand its base level of energy consumption, and then work with asset by asset business plans on how we might improve upon that in the next 5-10 year business plan. So demonstrating that, but then all the way through to how those decisions are made at our senior investment committees, how people are educated around this space within our group. We have 125 real estate professionals in Europe. They need all to be on the same pathway with access to the same good quality information to understand the why and how each decision they make is a greater part of the broader positioning of our thoughts around ESG. Taking it up a level, of course, investors can look at the company themselves. So DWS, not just its real estate products, but also what is DWS doing in this space. And there's a number of areas like the PRI, so Principles for Responsible Investing, like the UN Sustainability Goals that each company needs to be performing around and transparent as well. And coming in next year, there's also a European sustainability regulation, which is looking to rank product, not just real estate, all products in the asset management space. This is a start. This is the first year. It will no doubt be refined, but it also helps investors choose, asset managers that have a large collection of what might be more green products rather than products without ESG as a priority. And I think that will really help the transparency in this space. But without a doubt, there's definitely some further areas of development needed. Having an industry adopt a single measure, I think, is very helpful so that people can make choices around that. But as you said in your opening comments, actually, Anna, we also got to protect the performance, the financial rationale around why we're doing this, because that's how you get more investment in ESG strategies or companies that are endorsing very much the Paris Agreement. You need to make it a complete economic circle.
Yeah, completely agree. Thomas, do you want to add anything to that, or shall I hold off?
I would just to add that the standards and certification within the ISG was very progress over the last 10 years. And where we are probably lacking a lot is the real performance of the building and tracking of the performance of the building. And this is where I feel very comfortable that Middlecap was able to introduce technological backbone to the buildings, which allows for measuring, and the level of sensoring within our product is so high that we are able to prove that not only the certification is achievable, but the real performance of the building justify the certification which is behind it.
That's brilliant. Sounds like a big win. So how would you rate the industry performance at the moment in terms of sustainable investing, and where do you think it will be in 5 years' time? Jessica, let's start with you.
Yeah, so I think the industry is very engaged on this topic. Abby and I have similar working groups with industry bodies to very much engage and try and be transparent with what we're doing and how we're doing it, and also come to these working industry groups with questions of how other people are doing it. So I think the engagement levels are very high. Clearly, there is the further development required around the measurement, as we just talked about, and all walking a similar pathway so that investors can make an informed choice around their own priorities within our products. If it is high ESG priorities or middle ranking ESG and other priorities are further up their level. I think it's important that when we talk about innovations within the sustainability space, we talk both about technology innovations and how that might expand the industry, but also capital market strategy innovations as well, like products in the space and how they could answer a need, and how we can link taking the industry forward on the back of new products as well. So I actually am a big sort of advocate for that, because often when people try to design something new, they're trying to answer a future cause to solve a part of this puzzle. And it's really important that investors support that innovation as well, rather than asset managers trying to design it within an existing product that wasn't fit for that. So I think trying to push on business innovation in this topic could really leapfrog the industry further, and really asking for support for asset managers to do that, to solve some of these conundrums around measurement and investment in the space.
Very briefly, what did you mean by capital markets innovation that would support more sustainable investing?
So like new products. So there is a small but growing product range within ESG strategies for real estate. I think there should be a more significant number or more mainstream products have a stronger tilt towards that. That needs investors to be encouraged that is a good choice for them to do, and they wrap more capital around those strategies. But there'll be other great ideas. It could be a sector specialism topic. It could be looking to address one of the primary UN sustainability goal, whatever it might be. There's plenty of people thinking about this space, but often through those products, what I've experienced is that they have unlocked something. They have set a new course of action. They've shown how it can be addressed. And then people with maybe more diversified products like a pan-European fund, which we have, we can bring in elements of these innovations into more mainstream products, which are there to be larger scale and reach a further a broader category of investors from all around the world. But these small movements of these smaller products, I think, are really, really helpful, and I really would sponsor that innovation from the sector.
Brilliant. Abigail, how would you rate the industry performance, and where do you think it will be in 5 years' time?
And I think that the industry's actually done pretty well in the last few years of coming together, identifying some of the key challenges, and putting in place the frameworks and actions needed. What I would say is that's been quite concentrated into the sort of institutional part of the industry. So we've got some great initiatives, such as we recently signed the Better Buildings Partnership climate change commitment to achieve net zero carbon buildings, alongside about 30 other large landlords based out of London. But once you start to get outside of that group, who are doing some really inspiring and fantastic things, I think that the knowledge and understanding of what's needed to actually move buildings in the right direction so they are fit for tomorrow drops off quite significantly. And what we need to see is a mainstreaming of these issues throughout the industry, which is definitely starting. And I think it's really positive that at these kind of events discussing sustainability, it's definitely no longer just a few people working in sustainability talking to a room full of other people working in sustainability. It's the industry as a whole grappling with it much more. but that the pace of that mainstreaming needs to pick up quite considerably if we are to achieve some of the things that we need to. So in order to, I think that the industry will have moved forward quite a lot in the next 5 years, because I think that there is a recognition that achieving, as we transition to a low carbon economy, achieving net zero carbon buildings will actually protect value and enhance returns. So I think inevitably that will mean that these issues will be more mainstreamed, but in order for the entire building stock to move in the direction that it needs to, we need a whole-scale upskilling and transfer of knowledge throughout the industry to enable that to happen.
Just one more clarification question. So how will it enhance value to be more environmentally friendly and move towards a low carbon?
Well, I think we're set on this path with the signing of the Paris Accord to achieve a low carbon economy, and 2050 is a date that a lot of governments and investors as well have coalesced around. So we need to have transformed to a low carbon economy by this date. And I think that the market momentum and the regulatory environment is supporting that move around that date, certainly across Europe, and I think in a lot of other countries internationally as well. So what that means is that for an increasing number of investors, they're only going to start to invest in buildings that they think have a realistic prospect of achieving a net zero carbon goal. A lot of tenants are going to start to say, we can only occupy space that is going to support our goal to become a low carbon business. A lot of regulation is going to be defined and will mean that buildings are going to have to, can you get planning permission if they move in that direction, can only be leased if they move in that direction. So what that will mean is that there will be, I think, probably a short-term opportunity whereby in some locations, investors can take advantage of that, can provide a net zero carbon building when there aren't many around, and there'll be lots of tenants and buyers who are really interested in that, and there'll be a supply-demand imbalance. In the longer term, buildings that can't achieve net zero carbon will become obsolescent and will lose their value. So I think there's both a potential for value enhancement there, and there's also a real risk of obsolescence if we can't put in the frameworks to ensure that buildings achieve net zero carbon.
Okay, awesome. So Thomas, can you talk to me about how you make, well, I suppose the question is, what are the most exciting advances in the building design and usage space, whether that be smart technologies or moving towards net zero carbon buildings? Talk me through what's happening and where you see that going.
From the industry perspective, I think it was a big opportunity to embrace this sustainability and well-being for the whole industry, because there was not much improvements or change in the building industry over the last 100 years. So the sustainability and well-being brought completely new concepts, and I think this is the first time when the real estate is somehow moving forward. And I believe that the change is mainly coming to the standard investment, because today the developers or the contractors, they are all delivering towards the final investor of the product. So the driver for the improvements is at the end the capital markets, where the funding is coming from. And that's the main focus today, to deliver future-proofed product, because the investment cycle on a building is 20-25 years, where you are delivering product today, which needs to be sufficient for next 25 years. So the flexibility and technical backbone of the building needs to be in the level which survives the next 25 years. And this is the way how the improvements are coming to the product.
So how do you future-proof a building?
No, today the main focus is the sustainability and well-being. So through the sustainability, our view on the sustainability, there is this technical and measured part of that, but there is also in some way there is this soft part of that element. Like all our buildings are designed with, it sounds really basic, but they are designed with openable windows. We have direct natural light in the toilets and in the staircases, which which sounds so obvious, but in a city of London, you don't find any other building like that. And for us, this is must. This is in each of our buildings. So this is the soft element. Then there are building heights, which are structural things where you are increasing the heights for enough air being in the space. Then there are elements of the technology where there is flexible sensoring. So even if the times are changing and the new technology is coming, the framework of the building allows you to add new sensoring or change the existing sensoring. So building delivered today is fully equipped for today's standard, but in 5 years, the technology is moving so fast that the equipment of the building today allows you to change it with minimal capital expenditure in 5 years. So this is how we are trying to future-proof the buildings.
Awesome. And I think it's when you start talking about sort of health and well-being and offices, it's pretty difficult to ignore the impacts of COVID-19. Some sectors in the wider real estate market, like I would suggest the affordable private rental sector, have proved quite resilient in terms of value and rental income so far. We hold our breath, but others have faced more challenges. How do you think investment strategies will shift overall in response, and what do you see changing in the office investment space specifically? Let's start with Jessica.
Sure. Well, COVID-19, I think, has exaggerated trends that were already setting some pace before 2020. So I very much agree with you that the trend around expanding investment into residential strategies for institutional managers was there. And it was a growing talking point amongst many the specialists or diversified managers, diversified across the multiple sectors. And we've certainly experienced within our quite a large exposure in residential assets across Europe that for sure they have been to date a resilient income provider. We've seen very little changes in our occupancy rates, always up at the 97, 98% level, and collection rates have been nearly not affected by the issues this year. And the same goes for our logistics exposures as well. We've seen very much strength around the supermarket, anchored logistics, the pharmaceutical, other necessity sectors that really e-tailing especially has really driven strong or continued performance, I would say, for the logistics sector this year. And our strategies, for instance, our pan-European fund has a large tilt to both resi and in logistics, and we've seen investors very happy with that. So that was something that was, of course, put in train 3 or 4 years ago when we launched that product, but now coming through as an advantage during this situation. Where there is a bigger discussion point is around offices and retail. I think retail, the trend was already there, significant pressure on that sector through the introduction of online shopping. And that has been, that sector has been changing, adapting, and trying to find its way through. And we've seen more pressure on that because of the lockdown and people staying at home and shopping in a different way. So we'll see the continued, I'm not sure where that will end, but it is a continuing story for us. With offices, I think there we need to pause a little bit. There is a huge amount going on in that sector. Our office buildings do not have enough tenants in them at the moment from a people on the ground perspective. Most people are working from home still, especially in London. A slightly different picture across Europe, where I think you're seeing occupancy, move to the 30 to 50% of people re-entering their office space. I think London, we're still down in the sub 30%. So, Europe is a slightly different picture depending on where you look, but for sure we're learning and trying to understand what does this mean for the sector going forward. There I think you need to try and think about what is happening as an instant reaction to COVID-19 and people working from home, and what could be a long-term outcome. I don't have all the answers. I think it's a bit early to tell. So the reduction of how many people are using a building, very much looking at the the way that a workforce might work. So I think it would be much more fluid. We know that hot desking is going to increase. So what sort of space do our occupiers really want to use their offices, and what's it going to look like? And I think also a tangent there is around sort of how the hospitality features might come into an office space. So we've seen already that trend, that especially in the co-working space, a huge amount more facilities and services, and the way the space is broken up for tenants, you know, working at soft sofas, working at a hot desk point, having loads of breakout areas, having closed meeting rooms, you know, the whole different gambit of offers on a floor. And I can see that trend continuing, that very much the needs of the individual worker needs to be thought about now, rather than the team or the organization as we were maybe 10 years ago with the workplace story.
That's a really interesting perspective. And Thomas, how do you think investment strategies will shift overall in response to COVID-19? And what do you see changing in the office space specifically?
I can only agree with Jessica that the sectors like residential will not be affected significantly, because it's the standard of the market and it's not changing the fundamentals. On the retail, it will follow in the trends which were here for last 5 years. There is a less and less of retail. On the offices, that's the interesting topic. That's the main impact of COVID today on the probably occupation and the way how the offices are occupied at the moment. I believe it's a not long trends, because what you could see in the last 10 years, the holy office was the Google office, where people are meeting, touching, and sitting together, and everyone was working towards that. I don't believe that 1 year with COVID will change this completely, because at the end the office is place where the new ideas, where the value should be created, and you don't achieve it by Zoom calls. Like that's impossible. So there must be a way to find balance between the risk and the efficiency of work. And the trend of last 10, 12 years was going down from usage of the office 1 to 15, 1 to 12. In last years, it was 1 to 6, 1 to 4.5. I think we are going back to the standard of 1 to 10, 1 to 12. But still, the basic interaction between the people is so important for creating value that it will not disappear. There are two types of office works. One is the back office slash shared services work, where the physical presence in there is not that important, but then there is social aspect of these people being closed at home for a year without any contact. I think that's so important to people, to be in a group of people, to share the culture, to learn from your colleagues. I think this is the function of the office, so it can't disappear. And I think at the end it will balance off somewhere in the middle. So the less density of working with more hot desking will create more or less the same overall area of offices needed for the industry to continue.
Brilliant. Abby, do you have anything to add to that?
I agree with everything that Thomas and Jessica have said, that the pandemic has really accelerated trends that we were already seeing. With office, I think that more and more people are going to need to see a clear reason maybe to come to the office, and businesses are going to be a bit more thoughtful about their office strategy, which means they'll maybe be a little bit more demanding about exactly what they want that office to do and what role they want it to play in the lives of their employees. And I think that helps to further accelerate those trends around a sustainable office, well-managed office, office that has maximised health and wellbeing features, and an office that can enable people to collaborate and work together in a way that's, as Thomas pointed out, you can't really do that effectively working at home over Zoom. So I think we'll see more of a a separation there of exactly what is an office for. And I also think it more and more will say something about a business's brand and who they are, which I also think really plays well into that that trend of making it more sustainable and meeting the needs of the future. I think the other trend that's been accelerated is the focus on the social aspects of ESG investing. So that, I would say, was rising up the agenda before the COVID-19 outbreak, but some of the social inequality issues that have become very stark through the pandemic have that has given, I think, investors more clarity around the importance of those social elements and wanting to see the same levels of accountability and transparency around social factors as they've started to see with environmental factors.
Yeah, that's a really good point. So we're getting towards the end. I have one more question, which I'll ask each of you in turn. What's the one opportunity that you're most excited about and constantly find yourself telling colleagues or partners at work about, whether that be smart technology or how perceptions are changing? Let's start with Thomas.
Yeah, the most exciting opportunity I see that this sustainability pressure brings also opportunity to use new materials, new approaches to the building, which today are limited by the norms and standards which are in the building. Like using wood for building office building is today based on the current norms in European space. I think in UK is possible, but in Europe it's so limited, it's impossible because of regulation. And all these new materials and pressure for sustainability is challenging the existing regulations and norms, and it's an opportunity to really innovate in the industry. So this is my biggest excitement.
Brilliant. Jessica, what about you?
Yeah, I probably have three, and I'll keep them very short.
Yeah,
very short, but a little bit of what just Thomas said. I think the circular economy is really interesting. We're seeing some European countries really develop their thinking there. I think, across Europe, we need to do a little bit more research onto the potential for that, but I think that's just an interesting area to consider. I like to really see how we move the social agenda forward. We've got lots of case studies, we're just struggling to link them into something that's measurable and transparent. And so, because I think we're doing it, I'd love to be able to show in a uniform way why we think that's a benefit to the communities we work with. And then I think also just broadly the use of electric vehicles I think is exciting. I know it's all being tested, it's going to be implemented definitely within our lifetimes and fully used by us. How's that's going to change the interaction with the real estate environment? Definitely something to continue to watch, and it's an exciting part of innovation.
Brilliant, thank you. And Abigail, how about you? What are you most excited about?
I mean, the concept of net zero carbon buildings encompassing both the operational performance and the embodied carbon in the materials and the way that the building is constructed is incredibly exciting to me. And I've been working in this industry for 15 years. And if I had been told even 5 years ago that mainstream investors would be saying all of our buildings are going to need to achieve a net zero carbon standard within the next decade, I wouldn't have believed it. And that is now something that I'm regularly hearing big investors saying. So that gives me real hope that we have a realistic chance of meeting the Paris Accord and of actually transforming ourselves to a low carbon economy, which feels really hopeful in a time when we haven't maybe had that much to be positive about. So that's what I spend a lot of my time talking to my colleagues about in a very excited fashion.
Brilliant. Well, thank you all so much for sharing your insights. It's been really, really helpful. And I think it's events like this or talks like this that allow everyone to progress in the industry, because learning from each other is the best way to approach things. Why reinvent the wheel? And you're all doing such amazing stuff. So thank you so much.